All of big tech reported earnings in the same week. They did not just beat earnings, they crushed it. But what followed was mind-boggling. They not only failed to rally, some of them sold off. So what's the problem here? Are we facing a top? Is this all over? Stay tuned. Hi niece and nephew, this is Uncle Robert. Today we're going to discuss, is this the end of big tech or is this just a fake out? Let me share my thoughts and I hope this is going to be helpful to you. Please remember to like and subscribe for more videos like this. Now let's begin. First of all, there's a very big question that I do not understand. Why does all big tech want to report earnings in the same week? Are they trying to steal the limelight from each other? Or did all the CEOs come together to drive us nuts? Which one should we buy? Which one should we chase? Well, none of those came true. As it turns out, it was more like, which should we sell? What's going on? Why is everyone selling? Is this a fake out? Is this the market's top? Basically, there are a few reasons for stocks to sell off after earnings. First, you miss on revenue, the top line. Or you miss on profits, the bottom line. Or your growth slowed. Or you're giving a very bad forecast. And finally, you run up too much, way too high before earnings. Too hot coming in, too cold going out. Well, all the big tech companies fulfilled these 5 criteria. Why did they still sell off? Many companies like Apple, Amazon and Google have a huge initial pop, up to 4 to 6%. But all these fizzled within the next day. Some even closed negative. I have a theory which I'm going to share with you at the end. So you'll know if it's a good time to buy right now or should we stay away from this. But first, let's look at these companies. Tesla reported earnings beat and revenue beat. The net income was actually a record. Google's earning was almost double what was expected. Revenue exceeded expectations. YouTube was growing almost as big as Netflix. Google even announced $50 billion of share buyback. That should boost share prices, right? Microsoft beat both on top line and bottom line, and the Azure public cloud, which competes with market leader Amazon, grew 50%, faster than estimates. Microsoft also had $3 billion in revenue from LinkedIn, more than Snap or Pinterest. Apple announced another blowout quarter, 54% higher sales than last year, as well as $90 billion of share buyback. That should boost share prices by a lot. Earnings was 40% higher, revenue was beating, and look at the gross margin number, 42.5%. Next you have Facebook. Revenue increased 48%. Earnings was about 50% higher than expected. Revenue was a beat. Facebook says that there's 2.7 billion people who are using this app every single day. With the increased ads pricing, Facebook is getting more revenue per user. And then we have the giant Amazon. Sales surged 44%, smashing earnings expectations. Earnings was 50% higher than expected, and revenue beats. What's amazing is Amazon's advertising business generated close to $7 billion, and that's like 7 times Twitter. Let's look at these companies coming into earnings. Tesla was definitely not coming in too hot, and Tesla actually closed lower on the week. Microsoft was having a very modest move from last 6 months. It was not extremely hot coming into earnings and closed the week negative. Google was a strong performer in the last 6 months. This is one of the big techs that's also linked to the reopening. It's nice to see that Google ended the week positive, although it cooled down from the post-earnings jump. Facebook was basically flat the last 6 months. It gained considerably in the month of March, and this is one company that was able to sustain the jump post-earnings. Apple is another company that's basically flat the last 6 months. It had a huge post-earnings pop and then closed negative the very next day. Overall, Apple closed the week negative. Amazon was also pretty flat the last 6 months. There was a slight run-in to the earnings. Many people were expecting a stock split hype. As you can see, this is another case of post-earnings pop and then immediate cool-off. So with such remarkable earnings beat, and yet they're not able to rally, what is going on? This is my take and I've never seen the mainstream media reported this before. Remember my video on Biden's new tax rate over here? Well, many major institutions as well as 401k holds all these mega cap techs for many years, 10, 15, 20 years, and they have a lot of capital gains. This might be the perfect opportunity for them to cash in on these major capital gains at a lower capital gains tax rate before Biden increases it. Without massive buying, such dumping would have crashed the stock, and as a result would crash the entire market. In the end, these institutions want to make money, or in this case, wants to reduce tax losses. Tanking the market is definitely not in the agenda. So is there anything wrong with these companies? No. So what should we do? For long-term plays, I believe institutions are going to buy back into these names for the long term. So buying this big cap tax on dip for the long term is the right thing to do. Secondly, do not chase good news on these companies. Every major good news will be used by these institutions to unload most of the shares to lock in the capital gains. So we can slowly accumulate this big cap tax over time. There's no hurry. Well, there you have it. Hope this was useful to you. Disclaimer, this is not investment advice. This is just my own personal opinion. Please make your own assessment for investment. If this was useful to you, please consider liking this video and subscribe for more videos like this. Thank you so much for watching. See you in the next video.